Well, HSBC also feeling the heat overnight. Top executives testified before a Senate panel. The bank promised to take stronger action against money laundering and other illicit activities and led to the resignation of its top compliance officer. Philip Parker, CIO of Parker Asset Management, joins me now live here in Sydney. Philip, good to see you.
Nice to see you, Ariel.
You know, it seems like all of these, these banking stories, situations are really coming to light at the same time. There's got to be some significance in that, has there not?
Well, it's pretty endemic, isn't it? And as I was saying to Bernie on the show last week, it's very hard to legislate against fraud, and drug lords using banks to launder their money. You can put up whatever avenues you want to stop it, but often they'll get through those. But I think, you'll see it get a bit tougher legislation-wise. Having said that, hard to stop, really hard to stop.
When you look at HSBC as an individual bank, I mean, it really is, it's been accused of doing a number of things. Funding terrorism, for one, laundering drug money. Analysts are sort of saying at this point, do you invest in HSBC? Because as a bank, possibly you might like that bank, but then there is financial risk associated with this situation in the case of fines, political risk in case they need to, regulators, governments around the world need HSBC to be used as a scapegoat.
Sure. Yeah, well, we're not investing in banks at the moment, and and some of the reasons is the return on equity scenarios are very low for banks around the world as a result of Basel III, and I think that is a very serious piece of legislation that we can look at, and that brings into a lot higher amounts of capital being required to be held on balance sheets. So clearly for us that's the big issue, and what it's doing is restricting return on equity. And so at the end of the day, we've sort of avoided it. I think the last bank that we held was ANZ, which we did reasonably well out of. But, we think at the moment there's a lot of restrictions going to hit the banks, and also you've got capital not being lent out. So you've got capital contraction as well in terms of loan growth.
So on top of what we're following with HSBC, there's a libel scandal. I was just talking about that a little bit earlier, and that's got, the potential to become something much bigger than what it is right now.
Well, I was reading an article in the Sunday Telegraph in the UK just recently. I've just come from being overseas, and it's amazing what they're saying. Whether it's true or not, how would you know? I mean, I suppose we'll find out. That you've got, a member of government talking to the people at the central bank, and then giving a message down to Diamond and Co. He says he misinterpreted and told his person to do something on a false assumption, that they wanted to have lower LIBOR rates. But at the end of the day, it sounds very much like, unless you get your rates down, we're going to wind you up and turn you into a government bank. So I'm pretty sure that's what you're going to find out when everything comes to full reporting in about a year or two from now.
So, as you said, you're not invested in banks at the moment, but should investors out there be concerned? Because there's so many more of these banks being drawn into this web. And it does look like very few banks are not going to be tainted. Yeah,
it's the famous quote, I think, from a good old book, the root of all evil. And at the end of the day, we see it as that at the moment. There's been a lot of, put it this way, in simple terms, I worked in the UK at the Big Bang in 1986 when a lot of American banks came in and they took over the big retail banks in the UK. And all of a sudden we saw the concentration on clients, both retail and institution, turn to wholesale trading desks, looking after the bank's profit rather than looking after your clients' money. And that's, this has been going on since the 80s. It's been a gradual creeping sort of problem for all the banks around the world. So, I would say that the big issue is for the shareholders to look at how the banks are running their business, whether they're more focused on making money for themselves or whether they're out there trying to make money for their shareholders by way of looking after their clients and building their clients' capital base.
I think that's a really valid point. Certainly one we're watching very, very closely. Philip, good to see you today.
Nice to see you again, Ariel.
Thanks for joining us. Philip Parker from Parker Asset Management with me there.